Hello, I'm Rachel Jones and this is Kalkine TV's breaking news. At its meeting today, the Reserve Bank of Australia decided to increase the cash rate target by 25 basis points to 3.6%. The board says global inflation remains very high. In headline terms, it's moderating, although services price inflation remains elevated in many economies. It will be some time before inflation is back to target rates. The outlook for the global economy remains subdued, with below average growth expected this year and next. The monthly CPI indicator suggests that inflation has peaked in Australia. Goods price inflation is expected to moderate over the months ahead due to both global developments and softer demand in Australia. Rents are increasing at the fastest rate in some years, with vacancy rates low in many parts of the country. The central forecast is for inflation to decline this year and next to be around 3% in mid-2025. Growth in the Australian economy has slowed, with GDP increasing by 0.5% in the December quarter and 2.7% over the year. Growth over the next couple of years is expected to be below trend. Household consumption growth has slowed due to the tighter financial conditions, and the outlook for housing construction has softened. In contrast, the outlook for business investment remains positive, with many businesses operating at a very high level of capacity utilisation. The labour market remains very tight, although conditions have eased a little. The unemployment rate remains at close to a 50-year low. As economic growth slows, unemployment is expected to increase. Wages growth is continuing to pick up in response to the tight labour market and higher inflation. The RBA board's priority is to return inflation to target. High inflation makes life difficult for people and damages the functioning of the economy. And if high inflation were to become entrenched in people's expectations, it'd be very costly to reduce at a later date, involving even higher interest rates and a larger rise in unemployment. The board expects that further tightening of monetary policy will be needed to ensure that inflation returns to target and that this period of high inflation is only temporary. Well, that's the latest from Kalkine TV's breaking news. Stay tuned for all the latest finance news. I'm Rachel, signing off for now.